Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja. Well, shares of Zomato were trading on a volatile note today after multiple bunch trades. And Alibaba Group is planning to sell a stake of around 3% in Zomato, worth $200 million through a block deal. So, where is the stock headed and what should investors really do? To discuss this and much more, let's welcome our guest on the show today. We have with us Divam Sharma, founder at Green Portfolio. Thank you so much, Divam, for taking the time out and joining us here on Business Today Television.
Thanks, Tanya.
Divam, Alibaba Group is planning to sell a stake of around 3% in Zomato, worth $200 million through a block deal. Earlier, also, the company's co founder Mohit Gupta resigned, and the stock is actually down over 60% from its 52-week high. Now, profitability continues to remain a concern, but post the significant fall, the valuations now look comfortable. So, what are your thoughts on Zomato and where is the stock headed according to you?
Yes. So, if you look at the Zomato's balance sheet, the debt is almost insignificant. There is, in fact, a significant cash on the books on the balance sheet. If you look at the market is further consolidating with news like Amazon going out of the food delivery business, which is a very positive news for this duopoly business, which is Swiggy and Zomato. The worst news, which includes exit of some of the senior officials or exit of some anchor investors or fall in valuations in global tech product companies, is already factored in. If you look at the employees leaving, usually businesses like these, there are three stages of the business. Someone who has entered in an early stage business might not be the one who is leading the company effectively in the late stage of the business. Now the business has become more mature and needs a different set of leaders having a different mindset to run this company. So if you look at the valuations have turned really comfortable post the
Right.
fall. As you told that it has fallen more than 60%. Considering the modes of the business, the entry barriers, the inroads that the business has made, the valuations have gone really comfortable. We
Right.
are also seeing a new set of FPI and institutional investors coming in. We saw that the FPI market share in the company increased from around 16% to 27% in the last quarter.
Right.
Also, there are a lot of large institutional investors who have given a buy rating on the company, be it someone like Morgan Stanley. If you look at US Nasdaq, the Nasdaq seems to have bottomed out for now, and these type of companies, the valuations have sort of bottomed out. If you look at Amazon as a player, Amazon took many years for the investors to become profitable, but
Right.
when it did so, the long-term investors made a lot of money in this type of a company. So we
Absolutely.
feel that a similar type of a company is panning out in Zomato. Also, like if you look at the market share of Zomato as per a recent report was 55% in the food delivery business, which gives the company a lot of cushion to target profitability going forward. Swiggy is still like targeting a $10 billion valuation, and which has a lower market share in the food delivery business, right? So if you look at Dipinder's comments, they are saying that they are not looking for any further organic acquisition, which gives a breather to the company. Alibaba selling is more of an internal thing for Alibaba as it is facing cash crunch and challenges in the local market. If
Okay.
you look at all the segments, like you look at food delivery, you look at hyper pure business, you look at quick commerce business of the company, they are all growing significantly considering the base and also are reaching profitability. If you look at food delivery last quarter turned operationally profitable with 0.1% operational profits. Like the guidance of the company also says that the company on a broader level will be operationally profitable in the next 2 to 4 quarters if you keep aside the quick commerce business, right? So profitability is also coming. So we would say that considering all the factors, very high risk investors who
Okay.
have a long term investment horizon, should
Yeah.
consider investing in Zomato or holding Zomato at these levels.
Okay. And also, Divam, these block deals are happening at a discounted levels. So, do you think this is also a big concern? I mean, what would be your advice for all the retail investors, especially at this point in time?
See, these block deals are having at a discounted level because they are very large in size. So when you have to sell a very large chunk of investments in a company, you might have to offer a discount to find investors. Right? These block deals are primarily happening from investors like Alibaba, who was a private investor. And when the company turned public, they are no longer interested in the story. Plus, they have some cash crunch domestically, right?
Okay.
So, if you look at other investors, like if you look at InfoEdge, they are
Hmm.
still wanting to hold the stock and write the story. So,
Okay.
while there are a few exits of some investors who are more towards the private markets and are less interested towards the public markets, or some investors who need cash in their own company, but a lot of new set of investors and new set of institutions are also coming in. Considering a very comfortable valuations at these levels and a lot of things panning out for the company which looks positive, we would suggest investors to stay put or invest for a long term horizon in the company.
Okay, absolutely. And also for the other new age internet companies, I mean, as you rightly pointed out, that we are seeing a new set of FPIs and institutional investors entering these businesses at these levels. So, what would be your advice for all those new age internet companies?
See, these new age internet companies, India is still understanding these type of companies and grasping them as per their valuations. If you look at US markets, you have many such companies which are not making profits, but are still listed at a considerable premium.
Right.
India is digesting these type of companies, and we are seeing a new set of investors coming in, even international investors, a lot of US institutions coming in and buying stakes in these companies post listing at these attractive valuations. So definitely, if you look at on a broader scale, I would say that all these companies have gone really attractive at these valuations. And if you consider a 3 to 5 years horizon of investment in this company, and you are a high risk, high return investor, you should definitely consider investing in these companies. But obviously, you have to look at a lot of nitty gritties while investing in these companies. Like some companies like ATM, there are some intrinsic challenges in terms of the UPI market share, the market dynamics changing, right? There are some regulatory issues. But a lot of these companies, like Zomato, as talked about, the factors look really like really promising.
Yeah.
If you look at someone like and Policy Bazaar, they look very interesting at these levels. Nika definitely look really interesting at these levels. So
Okay.
definitely on a broader market, if you look at the broader market, these new age companies look really attractive, but you have to look on case by case basis and look at nitty gritties of the companies while investing.
Okay, absolutely. That's the word coming in. And on that note, thank you so much, Divam, once again for taking the time out and joining us here on Business Today Television. Thank you.
Thank you.
If you like the video, do like, comment, share and subscribe.